deposited in your broker's account. Depending on how many shares you own, you just want to times that times if you own 10 shares in Coke and Coke pays a 20 cent per quarter in dividend, just take that 20 cents times 10, which is a $2 dividend that you would get deposited in your brokerage account, which is passive income. And depending on what type of account you have it in, you can literally take that $2 and go do something with it. Maybe you want to buy something at McDonald's, or you want to buy a Coke, or you want to buy new underwear. You can do that.
Or have it reinvested in as far as buying more stock.
You can have it reinvested to buy more of the same shares, or you can just reinvest. You can pull it and reinvest it into buying other dividend-paying companies. So you can grow your investment portfolio with and have different companies in your portfolio.
You know, brother, I remember, this is how old I am. I remember when McDonald's sort of hit, and my grandmother, I kept asking my grandmother to take me to McDonald's. She took me to McDonald's, and she said, "This is the lousiest hamburger I've ever eaten in my life."
Yeah, that's funny.
But I say to myself, but if Grandma had sort of looked beyond the taste of that hamburger and said, "Hey, let's buy some shares,"
yeah,
just imagine where I would be financially just from that one share. And that it was because they're a dividend-paying company. And they just reinvesting that dividend, just could have kept growing and growing and growing. It wouldn't have mattered if I'd never ate at another McDonald's in my life.
Exactly. And some companies also do a stock split. I'm not sure if McDonald's has done one recently or in the past, but there are also companies that go through like a 2-for-1 stock split. So you're in 2-for-1 stock split, your one share gets divided up into 2 shares. So you have the dividend reinvestments that you can do. And with reinvesting the dividend, you're buying a portion of the share if you reinvest it. But then with a stock split, you literally have another share. It is calculated, and is at the point of the split, you're not up or down any money. It's literally just split in 2, but the value is still the same if you put those 2 together. It's like if you have a pizza and the pizza has 8 slices, but then you, instead of 8 slices, you slice it in like 16 pieces, but you still have the same value. But after the stock split, that's when everything changes, because the stock market never stays the same. So it can go up, down. So after the stock split, the value is probably going to change.
Mm-hmm. Did you have a question, brother?
I just wanted to ask you about cryptocurrency and like the future of it. What do you think about it?
So with crypto, I stay in my comfort zone, in my area where I'm the most comfortable, which is dividend investing. So when it comes to crypto, I actually don't pay a lot of attention to crypto, even though I see the price keeps going up and up. One thing though, back in 2017, I did buy Litecoin. I think I bought like $500 in Litecoin, and I've just held on to it. It has gone up. I think it's doubled. But when it comes to Bitcoin, for me, I haven't done the research on it, and I don't know how to value Bitcoin. Like when it comes to dividend investing, I know how to analyze a company. But with Bitcoin, I would have to figure out how can you analyze Bitcoin, because right now it's based on speculation. Right. Somebody hears that, okay, Bitcoin is going up, and now everybody jumps on Bitcoin and they start bidding everything up. Or they might hear that Tesla is accepting Bitcoin now, or Apple is doing something with Bitcoin, and that pushes up the price. But that to me is still speculation. If I had to speculate though, I can definitely see the Bitcoin price going up even past 100,000, but that's speculation. I'm not good at speculating. I would rather look backwards than forwards, because with speculation, like it's like up in the air. But I can see Bitcoin going up even more as it gets more mainstream. It's already mainstream, but as it gets more integrated into our life and into our payment processors, I can definitely see the price of Bitcoin going up a lot more. That doesn't mean buy it now. You would still have to do your research when's the right time to buy.
Right. Melissa?
Yeah, so I have a question about, as I said before, I'm new to investing. I just have the one stock, and for me, because I didn't know a lot about it, I was given like the option. I was gifted a stock, so I was given an option of you can have this one or this one. So I
Gotcha.
then went and looked at the ticker and seen, looked at information, tried to make sense of stuff I really didn't understand. But the thing that I did know is that I wanted it to pay a dividend. And
Gotcha.
so, like, for me, like I said, I didn't really know anything, but I knew that it made sense that I would want something that's going to pay me periodically,
Yeah.
as well as raise in value possibly.
Yep.
So I
So
guess
with the
my
big,
question is why would anyone invest? What's the benefits in investing when there is no dividend? Like,
I forgot his name. Like he just asked me about Bitcoin. Dividend investing is a slow process, right? When you look at a dividend, the stock that you buy is an asset. That asset has the potential to go up and down in value. But a benefit of that asset is that it also pays a dividend. So on a quarterly basis, you get paid money. Now, the thing about dividend paying stocks is usually they don't go up in value that quickly compared to a stock that doesn't pay a dividend. A stock that doesn't pay a dividend, think about your Twitters, your Facebooks, and what else? Tesla. Those stocks, from a growth perspective, the value of the stock can increase tremendously. Tesla grew by 800%, I think, last year, and they did a 5-to-1 split. So a lot of people don't like the slow process of a dividend stock because the dividend, the value doesn't increase that fast because it's usually a company that's a blue chip company, a company that's been like a Walmart. That company, the value of the stock itself doesn't increase as fast as a tech stock, but they do pay a dividend, of course. Most people want fast riches. They want to make money quick. So they want to buy low, sell high. That's the mentality and the mindset of most people. That's why people neglect dividend paying stocks and they go for the growth stocks, the stocks that have the potential to go up in value fast. Especially younger people, and especially if you jump on YouTube and you do some research on investing, you will see a lot of advertisements for forex trading, options trading, things that, and like methods of investing that have the potential to make you money fast, but it also has the potential to make you lose money fast. But that's the thing that triggers people. They want to make money fast. And you can do that, but of course you can lose a lot of money, but you can do that faster with a growth stock, if that makes sense.
yeah.
Because that's the mindset of people when they invest, right? They think buy low, sell high. That's the first thing that people think about when it comes to investing.
Right.
You know that there's that guy on Shark Tank, Kevin
O'Leary,
something
yep.
like, yeah.
I
And
think
he's got a couple of videos out.
He's a dividend investor also, right?
Exactly, yeah.
I think I've seen a couple of videos of him where he was pretty much preaching dividend investing, like instead of playing the stock market game, actually buy companies that are worth something. Yeah. Because even if you think about like, I don't play the stock market game and I don't follow what happens on the news because I value companies. I look at companies, what they're selling, how much money they're making, and based on some of those metrics, that's when I invest in companies. But think about a company like GameStop. The company itself is not worth GameStop. The company itself is not worth that much because all the young people are buying their games online. So having a store where you have to buy physical copies of a game, that market or that method of buying games, it's dying down. But there has been manipulation, and the GameStop price of the stock went sky high. And a lot of people made money, a lot of people lost money. But that's, like I said, going back to the mindset, people like to buy low, sell high.
So would you categorize yourself more as a value investor? Is that what that is?
Yes, a value investor. There are different names for it, but a value investor, I just look at myself as somebody who buys companies.
Mm-hmm. Yeah, the
Because
reason why.
there's a difference between like playing the stock market game and then actually buying companies. Because if you play the stock market game, you'll always look at the price of a stock and try to decide, okay, when's the right time to buy, when's the right time to sell, which might go into like day trading or even swing trading. But I like to look, even though I still use some of those methods that day traders use when I buy my stocks, but I focus more on, I get away from the news and I look at what companies are actually doing. What are the products that they're selling? Are these products that they're going to be able to sell 10 years from now, 20 years from now? And then what's the revenue looking like? What's their net income, their profit margin, the dividend that they pay out, the dividend payout ratio? So I try to stay away from playing the stock market and just jumping on hot tips that you see on the news.
Yeah.
How long you been investing? When did you get started? At what age?
So when I came to the US, I came to the US in 2005 and I didn't know anything about investing. So I went to the library, started reading books about personal finance. And those personal finance books always had a chapter on investing. So that's when I kind of started getting into investing. I didn't see the potential of investing until I started investing back in, I think 2006-ish, 2006. And the first company that I worked at, I took a little bit of my money and I invested in the 401k. Now I just left it. I didn't pay too much attention to it. But 5 years down the road, I think I logged back into my account. So I started investing in 2006, and then in 2011, I logged back into my account, and I noticed that the stocks that I bought, this was an index fund, it increased in value. Now it didn't increase in value a lot because I did not invest that much, but I did see the value increase. And that's when the dots connected for me, because I'm like, okay, this is interesting because something that I did 5 years ago, I can look at it now and I can see that the value increased. So there's one thing if somebody talks about it and they tell you, yeah, you have to invest because you can build wealth, etc. But it's another thing to actually see your wealth grow. And that's when it like really clicked for me. I'm like, this is interesting. Something that I did 5 years ago and it's worth more.
Now, was there any other, you have family members who are investors too?
So back in like 2005, 2006, my dad was investing, but he got scammed by a pump and dump method that was being used. And he told everybody that he met, like, never invest. Investing is a scam. He told my brother, never invest in the stock market. It's a scam. He never told me that. And I was in the US. Like, I was just like literally in the US that year. And I always asked him, like, why did you not tell me? Like, you told everybody else. Why did you not tell me? He told me, like, he already thought that I was not going to do it. But once I started doing it, investing, and I showed him the benefit of like how I invest, not saying that how I invest is the best way to invest, I got him back into investing and also my brother. So when I say investing, it's not necessarily just, okay, invest just for the heck of it. It's about investing for your future. So you don't have to be 70 years old still working at a company. It's about building wealth. It's about building wealth that you can pass down to your next of kin. That's the goal, the end goal. Okay. It's about building wealth.
So will you be invested in the stocks your entire life, or will you eventually get out when you retire?
So like I said, if you think about investing, I don't play the stock market game.
Right.
Think about it like I buy companies. So when you buy Tesla stock, you're buying a piece of Tesla. Now, Tesla doesn't pay a dividend, but here's the thing. The companies that I invest in, for example, a Coca-Cola, a Pepsi, those pay an increasing dividend. the cool thing about